Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and welcome to another session of Charts in Action. Today, we're going to be looking at the price of gold. Now, gold has seen quite a strong decline over the past week. Generally speaking, metals across the board have declined over the past 7 days. Now, there's a few reasons for this. There's been a big change in investor sentiment and the risk appetite of the market, partially due to trade deals with Japan. Also, the European Union, the trade deal which was struck a few days ago, was a big price driver for not only gold, but also metals in general, and also, of course, the US dollar, which is inversely correlated with the price of gold. So now that we've seen a very strong decline over the past few days, and we're back within the price range where previously we were seeing range-bound trading conditions, what potentially is going to happen to gold? And we're going to be looking at the data, we're going to be looking at the facts. We of course need to keep into consideration that tonight, in a few hours time, we will also have the Federal Reserve's interest rate decision. That, generally speaking, tends to create a lot of volatility on gold, the US dollar, and even the stock market as well. So we're going to be looking at what the current facts are, what the data is, and potentially what outcomes could we see after tonight's Federal Reserve interest rate decision. Now, here we've got a 2-hour time frame. This is gold against the US dollar. We can definitely see that very strong decline, ladies and gentlemen. Now, even though we've seen that really strong decline, we've kind of got closer to previous support levels. If I zoom out quite a lot, you'll be able to see that we are hitting multiple support levels, but we're not at the key strongest support level. The key strongest support level we can see is mainly between this area here and this support area here. So I'll put 2 lines here just to help with the visuals for our traders. So main support levels that we can see are at these levels here. Now, we're not at those major support levels. We are currently trading within a retracement, so we are seeing an upward price movement. Now, this upward price movement currently measures 0.90%. When we measure previous upward price movements, such as this area here and this area here, they were measuring between 0.70 to 0.87. So the difference between the previous 2 retracements and the current retracement that we are seeing at the moment isn't substantial enough to be able to indicate that enough upward momentum has been gained in order to signal that we are going to see a stronger upward price movement, such as a correction, an impulse wave, or something along these lines. So this momentum isn't yet indicating potential for upward price movement just yet. At the same time, we're trading below the 75-bar exponential moving average. We're trading below the 100-bar simple moving average. These are 2 very well-known indicators, ladies and gentlemen, because the 100-bar SMA is known as a price sentiment indicator. The 75-bar EMA is known as a major trend line. This is, of course, for the 2-hour chart. Now, we're trading below both those areas. So currently, that's still indicating downward price movement. At the same time, we're also seeing divergence when we're looking at the RSI. So if we're looking at the price movement, the price is still seeing a lower high. Whereas when we're looking at the RSI, we're seeing higher highs at the moment. So we've also got divergence again. So because of this, we're not getting a clear indication of upward price movement on our 2-hour chart. Also, if we go to a 15-minute chart, when we are looking at the retracement upwards, we're seeing a very clear pattern where we see a very quick, strong spike upwards, such as, for example, this area here, this area here, this area here. And what is actually happening is buyers are entering the market, is triggering a strong spike upwards, but very quickly it loses momentum and it just retraces or forms a full correction. So price action, if we're not taking into account any form of indicator and we're purely looking at the price action, it's not giving us indication of strong bullish momentum, because the upward price movements, even though they're quite substantial, they're short-lived, they lose momentum and just correct back downwards. And this is why the retracement is, generally speaking, quite weak. Whereas when we're looking at the downward price movement that we have been seeing over the past few days, like you can see here, it's very strong downward price movement which is lasting, and the retracements are very weak, which is the complete opposite to what we're now seeing on the upward price movement. So again here, that's not giving us any clear indications that the upward price movement will be maintained. Now, we also, of course, need to take into consideration what, in terms of fundamental analysis and order flow analysis, is currently indicating to us. So, of course, gold is a safe haven asset. So it's largely correlated, yes, with the US dollar, but also with the risk profile of the market. Now, to get an indication of the risk profile of the market, people, and generally speaking, traders, investors, companies, they look at greed indexes, they look at fear indexes. Here, for example, we're currently in an area, for the greed index, we're currently in the greed area, not extreme greed, but we are in the greed area. So that's generally speaking quite high, which indicates a high risk appetite. That's known to be negative for gold. If we look at the put to call options ratio, which is basically in the futures market, how many sell orders there is in compared to buy orders. Generally speaking, even though it's slightly retraced upwards, so very similar to the price movement of gold. This is why we're looking at this, guys, as well. Even though it's ticked slightly upwards, it is extremely low. Now, for there to be any indication that we're seeing a change in the risk appetite of the market, we of course needed to at least increase above 70. So not 270, but above 70. We're miles below that at the moment, so we've still got an indication that the sentiment in the market towards risk is still very strong. And if we look at the VIX Index, we can see the VIX Index here is currently trading 0.24% lower. Again, this is also indicating that the risk appetite of the market is still stable. So no indication that investors are suddenly going to run towards the safe haven asset. If we're looking at the components of the Nasdaq, approximately 65% of stocks are increasing in value. Again, very, very stable, ladies and gentlemen. And the US dollar today is more or less unchanged. So we've got no indication from the US dollar that gold is going to rise in value. The key thing though, ladies and gentlemen, is going to be tonight's interest rate decision. To be honest, and I can show you this here from the Chicago Exchange, almost 98% believe they're going to hold. Most likely they will hold. So that's not going to create any volatility, but their forward guidance of what we may see within September's rate decision, October's rate decision, and December's rate decision, that will create a lot of volatility. Now, if we see for September's rate decision that the 62% possibility of an interest rate cut increases, then that can support gold. Now, if this continues to decrease, okay, because previously that was at 65, it dropped to 64, then it dropped to 63, we're just below that level now. If it continues to decrease, then of course that will actually pressure the price of gold and support the price of the US dollar. So currently we've got no indications from fundamental analysis that we may see upward price movement for the price of gold. Of course, this is something that may change though, ladies and gentlemen, after tonight's Federal Reserve interest rate decision or after major economic releases, which we've got plenty of over the next few hours and few days. So when we're looking at the price of gold, like we said, we've got a slight bearish bias because we're trading below the trend line, the sentiment line. We're seeing divergence on the RSI. So if we regain momentum, so for example, retracements tend to be up to 60%. If we're following wave theories, up to 60%. So if it drops below 60%, here you can see we've got a 61 level. If it drops below 60% to this black line, and we're going to break below that black line, then we're getting again renewed signals for downward price movement. Whereas if we're going to form a breakout of this area here, which will also mean a breakout of the trend line, and of course that would also support the RSI higher, then we would start to get indications or buy signals for the price of gold. So we're looking at two potential scenarios. Now, for our short-term traders, if we switch to a 3-minute time frame, we've got here our 200 bar simple moving average. Now, at the moment, the Bollinger Band is trading upwards. We're mainly trading within the bullish side of the Bollinger Band, but we are at a major resistance level. So you can see here, 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 and here, we're continuously finding resistance. So even though we are in the bullish side of the Bollinger Band, we don't yet have a clear bullish indication. Now, if we lose momentum, we drop below our trend line, which will most likely mean that the Bollinger Band will start to point downwards as well. And ideally, the RSI will drop below 50. Then we will start, potentially, at least for the short term, start to get indications for ultra short term trades speculating downward price movement, potentially. That is if that occurs. If we don't get that, ladies and gentlemen, we can actually get a breakout of this resistance level. So above this level here, we break out above this level, and we avoid divergence, because at the moment we can see here we've got divergence. We've got higher highs on the price but lower highs on the RSI. So if we're able to break above the resistance level without seeing divergence and see clear convergence on our oscillator, then we've got a potential scenario where the indicators will point towards a buy signal. So we've looked at multiple scenarios, ladies and gentlemen. Of course, this depends on what is going to happen throughout the next 24 hours, specifically the forward guidance which is going to be given from the Federal Reserve. So that's the end of today's session. We've looked at what's driving the price of gold lower, such as, again, the trade deals with Japan, with the European Union, the higher risk profile of the market, the stronger US dollar, and of course, the very low possibilities of interest rate cuts in today's meeting as well. So that's driving the price lower. We're slightly retracing upwards at the moment, but we've looked at technical analysis and confirmed what two scenarios we may see for either a bullish scenario or bearish scenario, where those buy and sell signals will start to materialize from technical analysis. So that's the end of today's session. Enjoy the rest of your day. Of course, if you require any assistance, we have our HFM support team, which is available 24 hours a day. You can speak to them either via the phone, via live chat, or email, and I'll be more than happy to assist. In the meantime, though, enjoy the rest of your day, and hopefully you found today's session educational and informative. Goodbye.